Foster from the Traders Corner. Today we're going to be looking at one form of day trading, or one, I guess you would say, type of day trading that you might find. And we're going to be looking at different types throughout the rest of this series in terms of if you know nothing about trading. Because, as we talked about in terms of different, I guess you'd say, time horizons, where it be investing, speculating, trading, day trading, whatever you think about it. When we talked about day trading, we did talk about the fact that there are, multiple ways that you could day trade. So we're going to look at that today. We're going to look at the reason why we kind of separate them the way that we do, right? So first and foremost, we're going to look at one today. We're not going to look at all of them. But the first one that we're going to look at is the idea of what is called swing trading. Now, swing trading generally takes a bit of a longer term time horizon as it relates to day trading, and longer term meaning not so much like months at a time, but maybe a couple weeks to a few weeks at a time, maybe an entire month. But generally, if you get outside of a month, that's really getting more into that like the position trading style of things. But generally you'll hold trades for, and I'm not saying that this is hard and fast rules, because there might be a swing trade, and you're generally a swing trader, and you might say to yourself, well, I had a trade that I was holding for like over a month and a half, and like that's definitely a possibility, especially in the market like we're seeing now. Especially let's say you entered from up here and you've been managing it well, you could still be in this trade from all the way back in, what was this, June, so that's be a few months at a time. But still, I would start to caution and to get into this idea of, well, maybe it's more of a position trade, which there's nothing wrong with that, but just kind of thinking about it more time horizon wise, you generally talk about swing trading in terms of weeks to about a month, right? And generally what you see with swing trading, and this isn't always 110% hard and fast, you can really kind of work with your own strategy and see what you want to do with this, is generally the time frame you see people use are the the daily, 4 hour, 1 hour, 15 minutes, stuff like that. But you can start to get lower or even go up higher and look at the weekly, the monthly, and do however you want to do your analysis. Really the most important thing with swing trading is really just the time in which you generally try to hold trades, right? So what does that mean? You can, for example, let's say you take ICT's mentorship, right? You could theoretically swing trade ICT stuff. Now, he might not say to do that, but if you found a way to do that, you could do it, because you're likely going to want to enter on the 1 minute using ICT's concepts and all that kind of stuff, there's nothing saying that you can't hold that trade for weeks at a time as long as you manage it right? And that's kind of the biggest thing that you want to think about when it comes to swing trading, is your management of that trade, right? Obviously, the entry area is another big key, because generally speaking, since you are only going to be in trades for like days to weeks at a time, you're not going to get as many trades as a scalper or an intraday trader might get. So you have to make sure that you're taking quality opportunities and not wasting your capital on subpar opportunities, right? And that's why the area is very important. But also, like I'm saying, because you're going to be in these trades for weeks at a time, you generally want to, and generally what you see with swing traders they're generally more trend traders, trend following traders. Now, you can be a counter trend swing trader. Like let's look at here, for example, on July on Euro USD. Let's say you took a trade and you just like that. You took a trade from the swing right here, right? And you traded it all the way up to there. Well, from June to August, that's actually a month. Yeah, it was June, almost a month, July 14th to August 11th. That's almost a month, right? So that's at least a few weeks. And so that being said, that would be a trend trade, but you took it, that would be a swing trade, but you took it counter trend. But generally you'll see a lot of swing traders be trend based traders, right? And then even along with this, even if you are a counter trend swing trader, your management is still super important. As we see here in this area, it gets very, very choppy. So to take full advantage of this move up to 136.84, your management would likely have to be very on point, as opposed to maybe here where you might have been able to, get away with a little bit more in terms of your management might have been a bit easier in terms of, again, we're counter trend swing trading, you know what I mean? So from May 13th up to May 30th, it's at least 2 weeks. So definitely a swing trade, right? But again, it's counter trend. But generally, like I'm saying, you see a lot of swing traders be more trend following traders. And that is why, their management is super important. And as well, the entry area is also super important because you generally want to, as a swing trader. So, and this is why I say, maybe as an ICT student, you don't care as much about being a swing trader, or he might not promote you being more of a swing trader. I don't, really know. I don't think he really tells you kind of what time horizons to look at, but generally he himself is more of an intraday trader, right? And so because of that, it's generally because this idea of, you don't have to get all of the move, you don't have to get the beginning of the move, but generally swing traders, it's kind of more of a focus for them to get more of the move. You know what I mean? Because like I'm saying, you're trading less frequently. And so because you're trading less frequently, you want to get more of the move, right? Whereas if you're an intraday trader, you might be happy with just getting 30, 40, 50, 60 pips. If we're talking Forex, maybe, a couple basis points if we're talking like stocks or something like that. Whatever you want to think about it, right? You may be willing to take a bit less of a move if you're an intraday trader than if you are a swing trader. So that being said, just kind of think about those things as it relates to swing trading. It's definitely a good thing to look at if you were like me, you started out when you were in college, or you have a job that like takes up like not so a ton of your time, but a good amount of it, where you can't really be an intraday trader, like all that kind of stuff. I would definitely look at swing trading, but I would also kind of not shy away from intraday trading, because I think, and we'll talk about this in the next video where we talk about intraday trading, I think that actually gets some misconceptions in the space around this idea of if you have a job, you shouldn't be an intraday trader, because I think there's definitely ways for you to get at being a quality intraday trader, and this is from my own experience, a quality intraday trader while working a 9-to-5 job. So we'll talk about that in the next video, so definitely check that out if you're interested in that. But other than that, guys, I hope you enjoyed this video. I hope it provides some value, and join us again next time. Thank you.